What's up, everybody? Michael Silva here. The battle has begun between the Bulls and the Bears. Yes, it's been just a one-way ticket up, but now we're starting to see the Bears try to fight back. That's what we're going to talk about in today's Stock Market Brief, which we're keeping pretty quick and to the point because guess what? It's been a while since I've been in a bowling league back here in circa 2013, but I got some new balls and I'm joining a bowling league. It's going to be a lot of fun. Cannot wait. We're going to hop right into today's video. Snapshot of the market. XLY finished up as the top sector in the S&P 500. There's 11 sectors that make up the S&P 500. Consumer discretionary, what customers or consumers want, right? That's why we measure consumer discretionary versus consumer staples, which are more needs, both in the green. But this was really led by the charge there in Tesla making a little bit of a comeback. Overall, pretty flat day until you look down here at small caps. They got a little bit heated to the downside. Now, the VIX also continues to melt, getting below the 13 handle, looking like it wants to come try to fill the gap beneath us. This one, right, we talked about yesterday, that was filled in prior days. This is a weekly time frame. Yesterday, we talked about a gap hidden way up yonder on the 45-minute time frame. And if I look at something like back month versus front month volatility, okay, this in 2022, right? So in 2022, that's right here. When we got around 1.2, which means 20%, it means that back month, 3-month volatility is 20% higher than front month volatility, or the VIX. And when we've reached into these areas, right, it's highlighted on the screen, boom, boom, it's reached marking points, tops, and potential areas of consolidation. Now we're really high up there. We're up at 28%, right? We're up at 1.28, so 28% above. And the last time that we've seen that was actually here at the start of 2022. I look back even further. I don't have the chart, but I'll show you maybe on another episode. But it's very rare that we get this far extended. And if you just look down, there is typically more volatility and more chop that you see come in and around at these levels, and sometimes can mark potential minor turning points as well. So it's something to just be aware of, as we have been seeing just suppressed volatility, a lot of changes. And obviously a lot of people are saying the VIX doesn't matter anymore. I, to an extent, kind of agree. I actually posted about the VIX yesterday because a lot of people have been stating that, hey, it closed at $13. The VIX is not reporting a number as far as a dollar sign goes. It is a percentage. It is implied, right? It's implying volatility, right? Implied volatility. It's what this number represents is the expected move or range that the S&P 500 will close within in the following year. So as it stands right now, it's at 12.91%. So 12.91% means what? There's a 68% probability, if you think of it in terms of a distribution curve, right? 68% of the time, it's going to close within 12.91% higher or 12.91% lower next year. Okay, that's what volatility is actually reading at this current moment. And you can actually divide this into the square root of various metrics to get monthly expected moves, weekly expected moves, and daily. If you want to see that post on Twitter, you can see that post. Also, energy sector was one of the laggards there today, and don't be surprised when you see a big, huge move down in oil. Wow, just getting completely crushed. This thing to me is sniffing out recession. It's just, this thing is getting completely and utterly annihilated. And if you go back throughout history and you look at these rapid rates of change in the price of oil, actually big movements in oil thereafter preceded every recession, even going back to like the oil embargo. So this big rapid move, now we're starting to see it move down. We'll see here what that means for us later, or potentially recover. But it's down 4.16%. I'm not even going to talk about my Patreon group right now today because I got to keep on going. S&P 500, we're going to get into that. We had that bullish engulfing candle, which is bullish, right? But it was on decelerating volume. So if you want to see follow through, it's especially quarter end, month end markup. Hey, that's a very strong possibility that we can come swing here, right? Don't be surprised or shocked if that actually happens. But what we need to do is really kind of hone in on the 15-minute time frames to get a good idea as to like when we could be potentially more bullish. And today, we didn't even tag one of the expected moves for the daily, but we did come down and we did tag the lower weekly expected move. So a lot of the times that I've noticed, and when it came down here, we saw this positive divergence, right? We talked about it potentially coming down here and then looking for a trade setup, right, with the positive divergence to go long. Well, it got outside of it, and we said 68% of the time closes within here. And, well, it came back in. We have one more trading day left. It's known as VIX Crush Friday, so we'll see here if, like, hey, this is, kind of a chop range. If we start breaking back above to get back above that 5-day moving average, excuse me, my mouse is all freaked out. It's like one of those video games I have to blow into. Okay. The daily expected moves going into tomorrow is 438.82, 434.20. If we come right down here, don't be surprised. A lot of times when we tag these expected moves, price typically doodles around in that area. But we did reclaim that week-to-date moving average. We're still below a 5-day moving average. And as we stated prior, what does that mean? Right? It means the bears are in short-term control. We were right. Stage 1, you got, stage 2, this is the markup. Now we're starting to neutralize. This could be potentially stage 3, which would be the distribution. And then stage 4 would be decline. So if we start recovering this area, then we'd be a little bit more positive. But not only, if we come up here, just pay attention to the upper daily expected move. You'd want price to obviously come up and hold, right? And then start having this turn back up if you're bullish to come swing back up into this high point. Let's hop into the Nasdaq 100. Also bullish engulfing day, okay? Bears don't like to see that on decelerating volume. If you take a look at the Qs on the 15-minute time frame, this is a chart that we talked about yesterday. I want to call out that the head and shoulders, right, for the SPY, it's still active. And same with the Qs, right? The Qs is still technically a head and shoulders, advanced head and shoulders topping pattern. And you can see here, we did come up too. So we got outside, once again, the lower expected move for the week. Okay, and we didn't quite reach down to the month to date. We had a positive divergence. We bounced from that level, right? It came in and touched the top of this trend line. It rejected, okay? And this is why I don't like to chase a big, strong move here. You want to see how price consolidates. Boom, it broke out, back tested, got back above the week to date, and then we're right at that 5-day moving average, and we closed just below it, and there's still a gap right there. So going into tomorrow, right? If we start reclaiming this gap, right? If we fill the gap, get above the 5-day moving average, that could be still a possibility that it opens the door to 369.27, the upper daily expected move. That's in confluence with this prior area of support. Once support is broken, it can become a level of resistance. One thing that you can also look at is like, okay, well, it's kind of moving up higher. Boom, this could also very well be kind of a tightening wedge. So not to necessarily, this is a bearish structure overall. However, what I'm calling out is just the contraction, right? Expansion leads to contraction. So we can, boom, big old move to the top side. So be aware of that level to the upside. If we start breaking back down, obviously below the week to date anchored VWAP, that opens the door to the lower daily expected move, potentially even back down there to the lower weekly expected move as well. Let's look at the Dow Jones. So the Dow Jones, we talked about a while ago how, hey, if we recapture that quarter to date, okay, this could be very well an inverse head and shoulder type pattern, and we broke out of that neckline. The measured move, it's not necessarily a target, but if you need a target, you can use measure moves. Measure moves is just taking on this specific one, the head, right, measuring to the neckline and taking that same length on breakout right up. So that would be the measured move there. And as we stand, we broke out, and we're coming right back into back test. We're still holding above the quarter to date and year to date anchored VWAP. So that is a bullish sign overall. And if you really just take a look at this, we're really just kind of in this chopping range, kind of, if this is the middle of the range, you can see where we've acted as support. We broke down, we came back up, and we're kind of pinning around. So you really want to see a price get back above this level. But if you miss the run and you're like, okay, well, now can I buy? Well, yeah, if we get continued strength through this, that opens the door right back to retest this level. You're still above a quarter to date anchored VWAP and a year to date. So you're still looking at this amount of risk for potentially this amount of reward in a longer term swing trade there in the Dow Jones Industrial Average or the Diamonds, the DIA. If you take a look at the 15-minute time frame, I did not put the daily expected moves on this one. I don't actually know if this has the daily expiry. It might, because tomorrow is Friday. whatever. Needless to say, we down there, we're doodling around the lower weekly expected move. We do have a positive divergence forming on the RSI, so this could be one to potentially watch. You can see price is kind of putting in lower highs, okay? And then it's kind of wedging here, as you can see, lower lows. But now like high, lower high, higher low, sorry, low, higher low, higher low. So price is contracting in this area. It's coiling up with the positive divergence. So perhaps maybe this could be one to watch tomorrow. If we get back above that week-to-date moving average, boom, maybe that pops up, opens the door to this prior swing high, maybe even the 5-day moving average. I will call, once again, I've been saying it's kind of like a fight between the bulls and the bears. The bulls showed up today, but there's still bearish structures forming overall, right? You're having a lower high, a lower high, a lower high, a lower high, and some people might look at this and be like, well, actually, it's just, the bears are pressing down and down into this area of support that's been held up. So if they take advantage and they crack down underneath that month-to-date anchor VWAP and pushes us back through, that could be pretty bad for the Dow Jones Industrial Average. So in order to be more bullish, you'd want to get back above the 5-day moving average, and it's starting to decline, right? So that is how you want to go about this. If you want to be very safe, well, wait for price to get back up there, wait for this to start turning back up, and then start to look for higher lows, and then go from there. And if some people might say, well, but if I don't enter in and it goes up here, well, then I miss this big run. Okay, cool. Yeah, but if you go down here and then it just goes down like this, well, okay, then you took on all that risk. And you're down, right? Or you can potentially stop out, or whatever the case is. You got to be tactical. Hop into the Russell 2000, still in this sideways chop range. It was looking good, right? We had this big strong move, and now it's digesting. It could still be digesting at this current time. Could be wedging right here, and this could open the door to potentially take to this upper port of this channel to even potentially 200, where these other swing highs were. One thing to be cautious and aware of is look at where we opened today. Okay, this was the month-to-date anchored VWAP, that line right there. We closed right near the week-to-date anchored VWAP yesterday. We gapped down through it, and you can see price kind of just flagging. And if we flag, if this is a flag, a full measured move can take us back down to probably right around this prior swing high over here, which is just above that 180, between 180 and 181. Okay, we almost tagged the lower weekly expected move, and we didn't quite do that. So just be aware, if you're bullish this, you really want to see price get back above, obviously, the month-to-date, even the week-to-date, and right, like even the 5-day moving average. Look at how it was inclining. It started to neutralize, which warns us. And look at price comes up, boom, it rejected from there. You got to understand there are definitely algos trading around this 5-day moving average. You can just see it time and time and time again. So if you want to have, the trend in your favor, you want the 5-day moving average to be moving up if you're bullish and down if you are bearish. So you can see here, didn't even actually overcut it. Sometimes you get these overcuts, but rejected, and it's continuing its decline. So you want to see price turn back up, then you want to see this to turn back up. A lot of the times where people get mistaken is the 5-day is declining and then price gets above and they're like, yay, it's going to be back to bullish. Maybe, but the trend is still down, right? The average is still selling. So a lot of the times you get fake outs like that. And then that's when you get fake outs. Then potentially if price can neutralize, that's when it starts to flatten out, okay? That's what we got to pay attention to. We're going to hop into a couple indicators. This is starting to continue to curl, I should say, with some weakness there as far as the Nasdaq McClellan oscillator goes. Summation index, right, still in bullish context, but it is hooking. It's hooking a deep left, okay? If we take a look at the BPCO and PQ, this is also still an overbought condition according to the RSI. And then the NYSE summation index is starting to hook a little curl there too as well. We still have that negative divergence and a negative divergence on the Nasdaq McClellan oscillator as well. Okay, so just to recap, it's a fight between the bulls and the bears. On the shorter time frames, we still have bearish setups taking place. We're below the 5-day moving average, not only in the SPY, but also currently in the Qs, which looks like it can potentially get it back above it, in the Dow Jones Industrial Average, and on top of that in the small caps. So the bears have short-term gain here to potentially go lower. The bulls need to reclaim that, and then we need to see the trend turn up to be more confident that we can see a continued rise in price. That's all I got for you. See you later.